watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we talk about the latest market trends and also help you really understand which are the stocks and sectors that are buzzing in trade. We also welcome an expert to help you really understand deeper insights about the stock markets. What is the exact way how you should be approaching the stock markets at this point in time, the different sectors and the stocks that we discuss as well. Let's quickly look at how the markets are trading at this point in time. Well, they're flattening out right now. The Sensex slipping into the red and looks mixed. The Nifty is in the greens, but still, just about flat to positive at this point in time. 17,665 for the Nifty at this point, just about 8 points up in trade. 59,536 for the Sensex. That's down in trade at this point in time. Just about flat to a negative bias is what you can see. Let's also look at how the other sectors and the stocks that are buzzing in trade. Let's talk about the top Nifty gainers at this point. Well, it's the metals that have been shining bright right from the word go today. JSW Steel up by 5% Hindalco, Tata Steel up by 3% in today's trading sessions. The top gainers on the Nifty index. The other gainers include names such as Power Grid, Adani Ports and UPL that are up by 1.5 to over 2% in trade. Now the losing side has a bit of the finance names that are dragging today. Bajaj Twins down by over 2% each. Nestle India down by about 1.5% in trade. And apart from this, you also have Tech Mahindra and Bajaj Auto also declining in the session today. But let's quickly welcome our guest to get a deeper understanding about how to approach the markets at this point. I'm joined by Abhishek Basumallick, who's the founder and Chief Investment Officer at Intelsense Capital. Welcome, sir, and thank you so much for taking out the time for this discussion. Well, the markets are turning out to be very, very volatile on the F&O expiry session. But overall, as we have entered into this new summer, what is the sense that you're getting about the markets? So far this last summer, we've been absolutely flat with no great returns coming in way for the investors. But going forward, how is it likely to be?
Thank you, Sakshi. Thanks to be back on your show. So last year when we were discussing, I think my thought was that this particular year, 2022, will be a little bit lackluster because obviously there were a lot of headwinds that were there. I think now, looking forward, although it's always very, very difficult to forecast what the future is going to look like, but I would hazard a guess on the optimistic side. I think even though the overall Nifty may not do very well, but I would think that a large number of stocks, especially mid caps, small caps, could actually perform slightly better than what people are expecting, or slightly better than what they've been doing in the last, say, 1.5 years, where it's been largely flattish.
Okay. And which are the themes or the sectors that you're bullish on for this year? Where should investors keep their focus?
See, I think what is happening, if you see the broader picture, is there is a lot of emphasis on capex. So whether it is government capex or private capex, so anything that is in and around that theme, should do well. So capital goods, engineering, infrastructure, railways, these are the themes that definitely look good. Added to that, obviously, is real estate and autos. Both of them, especially real estate, is coming out of a slump of nearly 10 years. Autos are coming out of a slump of 4-5 years, and we are seeing the numbers getting delivered. It's going from being a hope to actually numbers getting delivered. So overall, I think India, should be on a reasonably good footing over the next 12 to 18 months.
Okay, understood that. A lot of pockets are actually shining bright today despite the volatility that we are seeing of the series expiry. There's the metals that are shining bright. Most of these top metal counters are up by 3, 4, 5% And then there's one more sector that's buzzing in trade, and that's the realty space. The sector is up, Nifty Realty especially, is up by 3% today. In fact, out of the 10 stocks listed on the Nifty Realty Index, 9 of them are seen advancing at this point in time. There's also a very interesting report that has really come about from the real estate sector. It's the Anarock Report. So let me just first give a sense of what the report findings are to all our viewers before just delving into the details of what this means for the entire real estate sector, what can be expected there, and then we will discuss about the listed stocks as well. Now, what this report really talks about is that housing sales in the top 7 cities, it believes, may hit a record level of 3.6 lakh units this year that may surpass the previous highs in 2014. And this is what Anarock Report really says. Now, remember, these top 7 cities include names like Delhi NCR, Mumbai Metropolitan Region, Kolkata, Chennai, Bengaluru, Hyderabad and Pune. Now, remember the previous high of housing sales was made back in 2014 when the units that were sold were 3.42 lakh across primary markets, and this is expected to be breached on the upside, and 3.6 lakh units is what Anarock really expects to be hit in this year 2022. This could be in fact a historic year as well, as per Anarock, when you talk about the housing sales right there. So talking about these kind of details, Mr. Basumallick, what do you really make sense of the real estate sector, how it and where it stands today? We've seen that the sector has faced 2 years of slump because of the pandemic. Are things really turning for the better in this sector?
Yeah, I definitely think so. See, what is happening is multiple factors are playing out together. One is that post-pandemic, I think everyone realized that there is a need for uh, a good living space, whether, so somebody who stays in a, two-room apartment is
Yes.
probably looking to upgrade to a three-room one, and so on and so forth. So that is one part. The second is uh, a lot of people were renting out, staying in rented accommodations. Some of them are moving or thinking about moving into a, a property that they own. So these are not something that happened or that is happening suddenly. I think this is an event which was triggered by COVID,
Yeah.
because you suddenly got into that phase of of need. So that is one side. The other side is we saw low interest rates, which also helped people make that decision. And I think another factor is that if you see what is happening is, again, during these last 2.5 years, uh, the income distribution between the people at the top half of the curve, if I may put it that, has not been affected at all. So the rich or the upper middle class have not been really affected, and their expenses have was reduced to an extent because they were sort of staying at home and not too many avenues to spend. So savings was there. Uh, and this is in contrast to what has happened at the lower end of the segment, where we are seeing certain amount of stress. If you look at two-wheeler sales, etc., you're seeing some
Right.
amount of stress at the bottom half of the segment. But at the top half, where even in the real estate, you will find that more expensive properties are selling out faster,
Yes.
right?
Yes.
So that is what is happening. So that is the trend overall in the country. Now, real estate is another interesting sector, which is very, very location specific. So a
Correct.
Bombay or a Mumbai market will be different from a Bangalore market, will be different from a Chennai market, will be different from a Calcutta market. So all of these markets behave differently. Even in large cities like Mumbai, micro markets will behave differently, right? So you can't take a real call saying that, okay, I will, you can't take a broad brush call saying that all real estate will do well, because in India, real estate companies have different styles or different geographic concentrations. Some are only residential, some are commercial, some are a combination of the two. So all of these, are mixed together. So you need to sort of pick and choose as to what kind of uh, uh, builder or what kind of real estate play you want to get into. So that is one part. Another
So,
very important aspect is the ancillaries, right? So whether it is a home improvement, like plywood, whether it is tiles, sanitary ware, paints. So all of these I call them, real estate ancillaries.
Right.
So all of these are actually all going to do well because the primary market uh, is now getting energized. So
Sure.
again, there are very, very good, well-run, well-managed businesses in these sectors, which can be definitely looked into.
Okay. Now, first I'll just ask you a little bit more on the primary players in the real estate sector. Now, in the last 18 months or so, if we see, most of the listed real estate majors have actually been reporting quite decent and high growth in their sales bookings. Now, talking about the annual sales bookings, we've actually seen macro tech developers, prestige estates, DLF, Godrej properties as the top performers. Do you see that continuing going forward also for them?
Yeah, I would tend to think so. I think most of the larger names, the organized larger companies are likely to do better because again, along with uh, the more higher up you go, the brand value of the properties. What happens is people want to get into uh, you know branded property. So if I want to buy a 1 crore or a 2 crore or 80 lakhs property, then people would want to buy it from a reputed developer, not
Sure.
from somebody who is not so well known. So obviously the more higher up you go in the price chain, if I may call it that, then people would want to go into these more reputed brands.
Okay, understood that. Now, let me also talk about the kind of returns that we've seen here. The performance has been rather bleak from these majors despite the boost that we are seeing on their annual sales bookings and despite this positive report that is forward looking into this 2022 year as well. Now, when you talk about the stock market performance in the last Samvat also, real estate sector has not really performed very well. And when you talk about on a year to date basis, some of the prominent names like say Godrej Properties is down 36%, Indiabulls Real Estate is down 52%, it has its own reasons, but Shobha Limited down 30 odd percent, Suntech Realty down 26%, Macrotech down 20 odd percent right there. Even DLF, although the fall is much less, but then DLF, Prestige Estates, the likes of Oberoi Realty and Brigade, they're down by 1 to 6 odd percent. So, talking in terms of the buying opportunity, where do you see buying opportunity really emerges at this point in time when the sector largely is on the negative side on a year to date basis? Where should one really take an exposure?
So you have to be very clear as to what kind of time frame you're looking at. So one, if you just ignore the stock price performance for a moment, one of the reasons why even let's say the revenues or the profitability for companies have not come through all that much has been because in the last 1 year we've seen a huge escalation in input prices. Cement prices have gone up, steel prices had gone up, stone chip prices have gone up, sand prices had gone up. Now we are seeing a moderation in all of these. So
Yep.
obviously, once you start looking 3 months, 6 months down the line, all of this, the numbers will start looking slightly better. So that's one part. Second is, from booking to delivering to the end customer, it takes roughly between 12 months to 18 months for so as for an apartment, for example, to be
Right.
completed and handed over. So you'll have to give it that much of time. Say last year the sector actually started picking up. So you'll have to give it a year's time for it to actually fructify in the numbers coming. Now, in terms of stocks, if you look at say a Shobha or a DLF in the larger cap space, they look quite good to me. In the smaller space, I think maybe an Anand Raj was looking quite interesting. Kolte Patil looks interesting. So
Okay.
different plays across the space are available.
Okay, understood that. Any impact of inflation and high interest rates on the demand going forward? Is that something that could be a speed bump?
Uh, so just do a basic back of the envelope calculation. So let's say you take a 50 lakh loan for a 20-year term. A year or 2 years back you were getting say 6.5% interest, and today roughly it is 8.4%, 8.5%, right? You would be paying so previously at 6.5%, you would be paying roughly 37 and a half thousand EMI per month. Today at 8.4%, you would be paying roughly 47 and a half thousand. So maybe a difference of 5-6,000 rupees you'll be paying, right? So it's not, in my opinion, something that is going to make a huge amount of difference today. Uh, because what has happened on the interest rate front is we've actually reverted back to the pre-COVID mean, right? Whatever was there pre-COVID, we've come back to that. It's not that we've shot up significantly beyond that. Now, if interest rates keep climbing up, which I doubt they will, I don't think they will climb up much further. Uh, you know, I don't see interest rates being a very big determinant of home ownership in India.
Okay, so in case I have to ask you, for an investor, if one has to allocate, say, a minimum percentage to or get an exposure to real estate sector, what could that be? You know, is that does that make sense to have some kind of exposure to real estate stocks in 2023 and in this summer?
Yeah, definitely. This is a sector which is doing well. So between real estate and real estate ancillaries, our investor can definitely have 5 to 10% allocation. Completely dependent on his or her risk profile and what kind of returns, etc. they are expecting. So allocation, etc. is a very individual portfolio specific decisions, but definitely it's worth taking a look at and nibbling into.
Okay, understood that. Well, thank you so much, Mr. Basumallick, for being with us and sharing your views on markets and on the real estate sector at large. Always a pleasure having you with us on the show. Thank you.
Thank you.
And with that, let's quickly look at how the markets are trading at this point in time. We are closing the session perhaps in the green now. Back again after a very, very volatile trading session. The expiry seems to be up in the green. Talk about the Nifty at this point in time. We are seeing an up move now, 747, 91 points up, 0.5% up. So there's a spike that you've been able to see in the last 15 minutes odd. The Sensex also up at 59,800 odd levels, 0.4% uptick can be seen right there. So both the indices ending the day perhaps with 0.5% gains. With that, we wrap up this edition, but do stay tuned on to Business Today TV for a whole lot more that comes up right up next for you.